become the only Indian NBFC selected for the FATF Financial Action Task Force on-site mutual evaluation report on India conducted in November, where India received outstanding outcome and placed it in the regular follow-up category. Muthoot Finance also launched 2 new ad films as part of its Bharosa India Ka brand. The subsidiaries have also done well. The Belstar Microfinance has increased its profit after tax to 90 crores and the gross AUM stands at 9,952 compared to 7,000 crores in the Q1 of last year. Muthoot Home Finance, the loan assets stands at 2,199 crores against 1,501 crores in the same quarter last year. Disbursed loan of 2,021 crores in Q1 compared to 109 crores in Q1 of last year. GNPA stood at 1.75% in Q1 versus 3.97% in Q1 of last year. The NNPA stood at 0.52 in Q1 of this year compared to 1.21 of last year. Muthoot Money, the loan assets stands at 1,657 crores versus 496 crores in the same quarter last year. The continued decline in NPA through the fiscal collection is witnessed consistently throughout the year. The NPA decreased to 1.63 in Q1 from 2.43. The branch network also increased to 674 from 470 during this quarter. The other subsidiaries, Muthoot Insurance Brokers have done good business and their premium collection of 148 crores in the total revenue stood at 44 crores. Asia Asset Finance, the listed subsidiary based in Sri Lanka, where Muthoot holds 72%, the loan portfolio stood at Sri Lankan 2,335 crores as against 2,000 crores in the same quarter last year. We have been able to do good business this quarter, and during this, additionally, the union budget also emphasized many things, and we are sure that the impetus given in the union budget also will help us in growing the company further. We see good prospects for the business in the coming years, and we expect to do well in the coming years also. So with that, I would like to close, and I would like to open the floor for any clarifications, doubts, or queries. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Maruk from Nuvama. Please go ahead.
Yeah, hello. Congratulations. Sir, I had a couple of questions. Firstly, on the gold loan growth, if you see last quarter also, tonnage growth was around 3%. This quarter also it's that. So of course, the total AUM growth is much higher. So going ahead, should you expect the same run rate in tonnage for the next 3 to 4 quarters? And then my next question is on top-up loans. So why is the regulator so worried about top-up loans? First of all, if you could share your top-up loans, in terms of what percentage of disbursements were towards top-up, and do you think any segment of competition is doing this aggressively, which has worried RBI? And also in terms of your guidance now for AUM growth for the year, where do you see it settle?
Sorry to interrupt you, sir. The line from your side is not clear. I'll disconnect you and reconnect again. Ladies and gentlemen, wait for a moment. We'll connect the management line. Ladies and gentlemen, we have the management connection back on call.
So, if you can hear now, I'll continue. So, you had asked 3 or 4 questions. One was about the tonnage. The tonnage is directly proportional to the gold price. If the gold price is high on incremental growth, the customer needs to bring only lesser quantity of gold. So the tonnage would definitely be proportional to the gold price. So if the gold price keeps steady or keeps rising, the tonnage will be in the same proportion. So I think that should answer the first question. The second question was about your top-up loans. Yes, customers take top-up loans because it is not actually top-up loans. A customer who had taken only 50,000 rupees earlier, now if he comes and if the eligibility for him has gone to 60,000 rupees, he takes more money on that. We understand that he may take more money on that, but as long as it is within the 75% LTV, we are not concerned. So as far as it is below the LTV cap of 75%, we are not concerned. And your question about, we have not heard anything from the RBI about top-up loans, about gold loans top-up. I have not heard anything. So of course, RBI cautions many things, and probably we have not heard anything from the RBI about this. As of today, the average loan to value for a gold loan is only 63%. So that means that the customers who have taken loans, only 63% of the loans or the amount has been taken by them. It is still much below the 75%. One more guidance, your question of guidance. We had been consistently giving guidance of 15%. So probably we will continue with that. We'll probably take a call after H1. This is Q1 only. After Q2, we'll see how the things are panning out, and if there is a guidance correction to be made, we'll do it at H1. Thank you.
Okay, thank you, sir. Thank you.
Thank you. The next question is from the line of Sumit Sarda from Compound Everyday Capital. Please go ahead.
Thank you for the opportunity. I just one question about impairment of financial instruments. There is one line item which has grown significantly sequentially as well as year on year. Can you explain the nature of this and why should it not be included under cost of funds? Thank you.
I didn't understand that. Can you repeat
which item is it?
Which item is it?
Impairment of financial instruments.
Okay.
Around 375 crores.
Okay, so on the impairment, it is nothing but the ECL provisions. So as you are aware, we have grown this quarter by about 11%. So that is roughly around 8,400 crores. So we make ECL provision as per the PD and LGD percentage which we have devised. So generally we fix the PD and LGD percent in March in the fourth quarter, and we retain that percentage throughout the year, and we review it only at the next year end. So we calculated the provisions based on the PD and LGD. Accordingly, because there is a growth of 8,000 odd crores, we know that there is a ECL provision on the growth element. Now, there is also an increase in the stage 3 assets by about 1,000 crores, for which we make a provision of about 10%. As you know, on gold loan, the NPAs are technical NPAs. We don't incur any loss because of the collateral. And we don't see any loss also coming on that NPA book. If you look at the average LTV of the stage 3 gold loan assets, it is only around 54% at the principal amount. So, because it's a accounting requirement as well as the RBI requirement, we have to make ECL provision about 10%. So because of these two, the impairment amount is higher this quarter. But we don't incur any cash loss on this impairment provision.
So, to keep things in little more in perspective, that we usually see it every year, every time, is that the NPA which we see is only a technical NPA because it has crossed the threshold time limit of 12 months plus 90 days. But all these loans, we are in the money. and especially now because the gold price is also high, when customers come and request for time, we give them time. That is why you see them as NPA. We can, of course, be little harsh on the customer and maybe auction the gold and make it into a zero NPA. But then we felt that it's not in customer's interest and also the company's interest to auction the gold even when we are in the money. So when we are in the money, the customer requests for time, we don't mind giving them more time to raise it. That is definitely a customer-friendly approach, which Muthoot has been practicing all around.
Yeah. Thank you, sir. Sorry, I think I misunderstood. What I wanted to understand was, is there any impact of foreign exchange translation on the forex borrowings that we've taken, and are we also recording it here?
Forex borrowings. Is it because of that? No, so of course we have done a dollar bond fundraise of about $650 million in the first quarter, but that will not have an impact in the impairment. Those hedge costs, etc., will come as a part of the finance cost.
Okay, understood. Very clear. Thank you, sir. All the best.
Thank you. The next question is from the line of Subhranshu Mishra from Phillip Capital. Please go ahead.
Hi, thanks for the opportunity. Two or three questions. So first is, what is the accrued interest in this quarter? Second is, can you please give us the AUM split of less than 1 lakh, 1 to 3 lakh, and more than 3 lakhs? And the growth guidance that we are giving of around 15%, what proportion of that would come from South versus non-South? Thanks.
Yeah, I think the South versus North, it is going equally, almost equally. South is today about 48% and North is 58%. So proportional growth will be there for the guidance also. That is what we have been doing. And the second question was about the impairment.
No, accrued interest. Accrued interest is 1,980 crores.
1,980 crores is the accrued interest. And one more point.
The ticket size. Give me a second.
Ticket size 1 lakh and 3 lakh. Give me 2 minutes.
So South and non-South both will grow at 15%. Fair understanding, sir?
Yeah.
Okay.
Less than 1 lakh is 32%. 1 lakh to 3 lakh is 37%. Above 3 lakhs is 31%. So 32, 37.
Right.
31.
Got it. Thanks.
Thank you. The next question is from the line of Rajiv Mehta from Yes Securities. Please go ahead.
Hi, good evening. Congrats on a very strong set of numbers. Sir, we have seen a clear uptick in new customer acquisition volume, even the fresh loans to inactive customers, even that volume has increased. So if you can elaborate on the drivers of this better numbers coming through in this quarter. Is it one of the competitors not being present that has helped us, or is it some competition moderation from banks? Or do you see that demand is coming because there is lesser availability of unsecured credit for the borrowers?
I think you answered all the questions. All the three are reasons good enough. Maybe the credit requirement is also going up. So probably there has been some caution from the Reserve Bank also with regard to unsecured loans, etc. So probably people are now coming back more to gold loan. That is one. The second, of course, the competition from the banks. It is always there. We wouldn't say competition. It is always there, but probably it has come down. So, but as always we say, companies like Muthoot, which are always focused on gold loan, we always have a room for good growth in gold loan. So that is what we have been able to do. Muthoot has always been focused very much on gold loan, and we have been able to get the advantages of probably the lesser competition or the decreased intensity of competition from banks as well as some other NBFCs.
Mm-hmm. And sir, what is the reason for holding back, revising the guidance upwards, after this stellar show? Because from March to June, we have already seen 11% growth in the gold loan portfolio. We're still guiding for overall 16%, for the year. So I mean, have we seen the trends slightly moderate a bit on the growth side in July and August? And if not, then what is holding us back from revising the guidance? Because out of 15 odd percent, 11% is already done in the first quarter.
I think we didn't want to give a very, we want to revise the guidance as early as in Q1. So we thought we'll do it after Q2. That's all. It's nothing more than that.
Yeah. So July, August trends have continued in terms of growth and customer acquisition.
I think this is continuing just like before.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Ashish from Infinity Alternatives. Please go ahead.
Thank you. And congratulations, sir, for a stellar set of numbers. A couple of questions which I just wanted to understand on the NPA, especially the stage 3. Now that we have a very large number, do we expect over the next couple of quarters the NPA number, stage 3 number to come down? I know you guys historically try and be customer friendly, but the number is getting very large. And related to that, sir, we had done an ARC transaction, I think 3 or 4 quarters back. So if you can just update as to how much returns have we got beyond the principal, and if you can help us understand if you are thinking of another ARC transaction on our books.
So I think, as you said, we are definitely in the money. We have, as a stated principle or stated policy of Muthoot, we would like to accommodate the customer wherever possible. So, as you also said, if the numbers are going beyond a level, then we'll have to take some action, maybe auction little more frequently. Is that what we require? But then we would, of course, persuade on the customer to come and close the loan and probably take a new loan. That is something which we are starting to do now also, persuading them to close the loan and probably take a new loan. That will also change the NPA status, etc. So we are taking steps to that. Finally, we would like to accommodate the customer as far as possible. Regarding the ARC, which we did 6 months back, we did transactions for about 80,000 customers, and today we are so happy that out of the 80,000, more than 80% of them have taken back their gold. So probably we were able to, prevent auctions, or maybe not do auctions in 60,000 cases, where 60,000 customers are, I am sure they are definitely ever grateful to us for saving their gold and giving them little more time, 3-4 months time, so that they were able to take back their gold. So to answer your question of the ARC, the ARC was done for about 700 crores. I think about 200 crores is still outstanding as principal receivable from them.
Right. And are we planning another ARC transaction so that we, as you said, we are in the money, so are we looking at giving another ARC transaction? And on the ARC transaction, are we expecting any upside beyond the principal? Because obviously it was done at 100% principal is what I remember.
Definitely, we expect upside on the principal. Definitely, as soon as this principal is received, the balance which we are going to receive would be the interest, and that will come in the next quarters. So we are not considered doing another ARC at the moment.
Okay, thanks, sir, and wish you all the best.
Thank you. The next question is from the line of Pranav from Bernstein. Please go ahead.
Okay, good afternoon. Thanks for taking my question. My question is again on the stage 3 assets. While I understand there is no cash loss for the company, can we see this as a decline in the repayment ability of the customers? We are seeing a general pickup in credit costs across, various lenders. Is this a continuation of that trend? Some color on that would be really helpful. Thank you.
Personally, I don't think it is that reason, because the other option would have been for us to auction the gold. So if you look at our auctions have been very minimal in this quarter and last quarter also. That is because we were accommodating customers without auctioning. So if you look at the overall the number, the NPA customers or the stage 3 customers are almost the same. It is just that we thought, because we are not auctioning, many of them are now remaining in our books as stage 3. That's all. because these are all small customers. It is not that there is some stress in the market for these people, etc. And such a small ticket size, all around the whole geography of India, we don't see any such stress, etc. But the fact here is that we are able to accommodate them and prevent auctions. So if you look at our auctions would have been much lesser in the last 2 quarters.
Understood. So just so that I understand this right, so you're saying that the number of customers who have fallen behind on payments hasn't really changed. Only thing that has changed is the lesser number of auctions, which is driving this higher number. Is that fair?
You're almost right there.
See, customers also very well aware the value of the collateral which he has given, so he can very well request for some extra time. So if you are not giving extra time, he can go to somebody else and borrow the same amount. So it is not, as Antisa said, it is not due to any stress across any particular segment. It's just that he's postponing that repayment. Now, if we send an auction notice, he will come and repay the loan. Majority of them will come and repay the loan. But as a prudent practice, we give some extra time to these customers, especially for the fact that the average LTV on these loans at origination is around 54% at the current price.
Understood. Thank you very much. That's super helpful. Thank you.
Thank you. The next question is from the line of Pranav Kumar from Ratnatraya Capital. Please go ahead.
Sir, can you give me the auction number?
Sorry to interrupt you, sir. May I request you to please use your handset?
Give me the auction. Can you hear me now?
Yes, sir. Please go ahead.
Can you give me the auction numbers for this quarter and last quarter?
So, now this quarter is 68 crores.
And last quarter, how much was it, sir?
Last quarter, just give me a second.
Must be about 200 crores.
Last quarter was about 162 crores.
Okay. And did I hear right? We are saying nothing. We are not seeing any kind of difference in the amount of stress we are seeing on the ground on the customer, but it is more because of us doing not much auctions that the GNPA figures go on.
Yeah. You are almost right.
Okay. And from here on, what is the kind of credit cost we should expect for the rest of the year?
So as per ECL calculation, we have fixed for gold loan. The PD we have kept as 8.59% and LGD is 9.96. So this will continue to apply for the growth element, and on the NP assets, the loss given default will be applied for the entire NP assets at 9.96%. So that is the impact. So it is a mathematical formula. No, I can't do much about it till it is revised.
Okay.
And we also, sir, to clarify something, none of these NPA results in a loan loss. That is what you want to know. None of this, zero. Loan loss on this is zero.
I do understand that, sir, but I was trying to more figure out why would these customers actually. I understand you are 54% LTV, but I was just trying to understand why would is it the stress in the lending segment as a whole that this is happening, or why is it that the GNPAs have suddenly gone up? That's nothing.
I told you, because customers know that their money, their gold is worth much more. When they request for little more, 3 months, 6 months time to keep it with us, we just accommodate them. That's all.
In fact, compared to last June, NPA percentage has come down from 4.26 to 3.98. But doesn't mean anything as far as we are concerned.
Right. Okay, sir. Okay, sir. Thank you.
Thank you. The next question is from the line of Gao Juan from Sconfil. Please go ahead.
Hey, sir. Just want to understand, post the budget, there's a pretty sharp drop in the domestic gold prices. Are you seeing, demand side being impacted post the budget because of that?
There was a fall in the domestic price by about 8%, 9%, because there was a 9% fall in the customs duty. But of late, if you look at today's price also, the international price has actually gone up. It has actually breached $2,500 dollars. So international price is actually covering, and today the peak decrease in the price compared to pre-budget, it's only about 4%. So probably.
Sorry, I missed your earlier answer, but in July and August, is the momentum that we saw in the first quarter largely continued so far in terms of the growth?
The gold price is still going up only. The momentum, there may be spurts of very high growth, very high price rise in 1 month. No, but if you look at overall in the last 1-2 years, 3 years, the price has been steadily going up only. Mainly probably because of the geopolitical tensions, etc.
No, sorry, sir, I'm referring to your gold AUM growth in July, August, right?
So we are continuing to see a good level of disbursement. Of course, we can give a quantification for that. But no, we are seeing a good disbursement as far as gold loan is concerned.
Got it. Thank you.
Thank you. The next question is from the line of Deegan Heria from GreenEdge Wealth. Please go ahead.
Hi, sir. Sir, one question I had that, even in South India, which is, considered as a matured market for gold, I hear so much on, talk on growth, all the small banks, cooperative banks. So somehow, this entire, gold loan industry is seeing very, very vibrant growth. Any reasons you can point out for this, sir? The gold price is one reason, but anything else you can tell us?
Good to hear your voice once again. And I think what is happening is also companies who are really focused on gold loan, they will continue to grow. The others who come in maybe come here, focus after 1 quarter, focus on this, after 3 quarters, reduce their focus. For them, the growth may not come as that. So those who are focused gold loan players, probably I can say only about Muthoot. We would definitely continue to see growth momentum, whether to south or north, etc. Even with regard to, as you say, mature market. Mature market is also, there are so many people still who have not definitely made use of the gold loan model for their funding requirements. So the market is very huge. There are so many people still there who have not used this opportunity. So we see new customers also coming. And in the last several quarters, in 1 year, 2 years, many of the banks have also been doing well, doing gold loan well. So what should I say? The knowledge of people that the gold loan is a good borrowing vehicle is also increasing. So more and more people who earlier were not taking gold are trying to take this. And in the mature market also, there are repeat customers. We always say 80%, 75-80% of our customers are repeat customers. So they take a loan now. After some time, they come again and close the loan. After 3-4 months, they come again. So as long as we are focused there, as long as people feel that Muthoot is a reasonable company where they are getting good service, and also, of course, always their gold is also safe and not auctioned very quickly, etc. We get a lot of repeat customers.
Right. So very good. That's very good to hear. Sir, but in that case, sir, shouldn't we revise our guidance? I know you just said that after H1 we will do, but you start the year with 15% guidance. This year we started the quarter with 15% growth. Just 1 quarter. So maybe is it time, or you just want to be cautious because maybe the competition will bounce back again and whatever?
It's not that, because I think if you look back also, all the years we have always revised only after second quarter, etc. We have never revised after first quarter. So just going by old precedents only. But definitely we would take the maximum we will use the maximum opportunity for gold loan growth. We will leave no stone unturned to get the maximum possible gold loan business. So that is our main focus, and wherever there is an opportunity for gold loan growth or AM growth, we will do it, and we will use it to the maximum hilt. So it's just that we don't want to give a revision after one quarter. Probably next quarter we will be able to give a better guidance.
Done.
Not that we see anything in the horizon that is negative. We don't see anything like that. But just that we wanted to do it after two quarters. That's all. Nothing more than that.
Perfect, sir. Sir, and one more thing which I wanted to ask is that in 2021-22, when a lot of these banks were getting aggressive, we had to take that trade-off of growth versus lending yields. Now I see at least our lending yields have been stable despite such high growth. So that whole growth versus margin trade-off, you think that is over now, and we should at least get this stable margins which we've been getting for last 4-5 quarters?
I think the margins are reasonable now, and of course occasionally we see the borrowing cost also going up slightly. So as the borrowing cost is going up, we will, whatever we can absorb ourselves, we will do. Rest we'll have to pass on to customers. So we take a call on that. Maybe in the coming months we'll take a call if the borrowing cost, etc., incremental borrowing cost is going up. We'll have to take a call on that. For some time we will try to absorb that cost, but afterwards we have to take care of our margins also, NIMs also. So if required, we will do a yield revision also. Yes. As far as possible, maximum extent, we would like to give the best rates to the customers.
Got it, sir. Sir, and this is safe to assume that this 20,000 disbursed, we disbursed everything in bank accounts, there's more than 20,000. So it was that way an operationally very heavy quarter, but as I can see, there is no disruption. So that thing went very smoothly this quarter?
I think, yes, there was such a big commotion and confusion because everybody is carrying cash and 20,000, etc. It was so smooth. Most of our customers have bank accounts. They come, when they see in the branch, can I give you 50,000 rupees cash? We used to give. But now we say we can't give, we just transfer it to their account. Everybody has some Google Pay or UPI or something is there for everybody. So nobody has found it difficult nowadays. No issue has come because of that.
Right, sir. So that's great to know. Thank you so much for the opportunity, and I wish you great for this year and the coming years.
Thank you. The next question is from the line of Pranil Nandu from Edelweiss Public Alternatives. Please go ahead.
Yeah, hi. So this is Prolin here. Thank you for giving me this opportunity. Just a bookkeeping kind of question. While I understand that our NPAs are more technical in nature, but this assumption that we change at the start of the year for LGD and PD, has that changed versus last year?
So from ever since India has implemented, we normally revise the PD LGD only in March quarter.
So then, in March quarter of March of 24, we must have revised it upward, right? Has it changed versus March 23 quarter, the assumption of an LGD and PD?
Yeah, it has come down a little bit lower compared to March 23.
Which means that the incidence in terms of, asset quality is better than what we were building in. Am I correct?
Yes.
Right. Okay. Thank you for that clarification. Secondly, sir, just extending Devan's question a little bit further. Muthoot has always been focused on gold loan, and it's like a all-weather friend for its customer. It's always there, right? Competition comes and goes, and you are very optimistic in terms of loan growth also, going forward. So I'm just trying to, link the gold loan growth with the margin part. So is it fair to assume that maybe in near past, right, for a couple of years when competition was high, our decision on pricing was not purely based on the cost of the fund, but it was also based on what the competition does. But going ahead, will it purely be based on cost of fund? Is that a fair assumption to make?
Cost of funds. So I think one thing is that we have to look at the customers also. The customers is our first priority. So when customers are demanding for very low interest, they are getting low interest from somewhere else, we have to definitely take care of our customers at the cost of probably some profit. But then after some time, customers also realize that what they saw as getting a low rate from somewhere else is not is having its own difficulties, etc. They started coming back to us. So now today we have it. So it's not that now because customers have started coming back, we need to simply increase our lending rates. No, I think we look at the customers first. So that is why, because any other company, nearest competitor, NBFC, etc., we have much more than 2 times, 3 times their AUM. Because customers feel that we are a more reasonable of the company. So whenever we have an opportunity, we support the customer, whether it is through lesser auctions, less frequent auctions, or maybe not increasing the rates or increasing the rates only to maintain our NIM, etc. So that adheres customers more to us, because these are mainly walk-in customers. They have to come back and decide to come to Muthoot. That is what is most important here. The repeat customers, the customers who have taken a loan, closed it, should come back to us for the second one. And that we are definitely seeing. And that is where we have been able to score over many other people. So to answer your question, now that there is no competition, etc., it's not that we want to increase the rates. We will try to maintain our NIMs, etc., reasonable profit, good profit, and then we will continue with that rate.
All right, sir. That's it from my side. Thank you for the answers and all the best.
Thank you. The next question is from the line of Jigar Jani from B&K Securities. Please go ahead.
Yeah, hi. Thanks for taking my question. So just a follow-up on the margin part. So earlier our guidance of 11 to 2% kind of NIMs that we will be maintaining, will still be maintaining those targets? Or do you think there is an upside or downside risk to this?
Sorry, can you repeat? We didn't quite understand your question. We didn't quite understand your question. Jigar, are you there?
Mr. Jigar, may I request you to please repeat your question?
Yeah. Is this better?
Yes.
Yeah. So what I was asking was on your margin guidance. Earlier we have been guiding for 11 margin rate. We've got done about 11.5%. So you'll be still sticking to that margin guidance?
Yes, 10 to 11. Yeah, maybe 0.5%, 1% here and there. We generally try to stick to that, sir.
Okay. And any risk that you see to this margin, given that maybe one of our competitors who is an embargo, when they come back, they might revert back to aggressive pricing to regain market share. So what would be our strategy? Would we still kind of sacrifice on margins to maintain market share, or would we prefer to maintain margins at current levels and grow at a slightly slower pace? Because we have seen this play out before in terms of teaser rates. I just want to understand, if a scenario like this comes in, what would be our likely strategy?
Actually, Muthoot Finance, we have our own strategy for business and growth. We are not very much concerned or dictated by what others do. But then we don't want to comment on the other companies, etc. We would like to grow our company in the way we like, and I think we have been able to do that well. We will try to stick on to that.
Well, sir, I think somebody asked you the quantum of the top-up loans that we do. Would it be possible to share?
See, there is nothing like top-up. As we said, the average LTV on the loans is around 63%. Now, a customer who had taken a loan earlier, if he has a requirement, he will come and take an additional amount. If I am not giving that loan, he can go to somebody else and take a loan. So, I don't think that is a top up. It is purely based on his requirement. Top up really, meaning when somebody has, taken the maximum amount of a loan, and then on top of that, he's getting a additional loan. Today's environment, especially when the average LTV is only 63%, the question of top up doesn't arise. It is purely based on his needs at different points of time.
Okay. So we won't have a separate number on these type of loans that we are giving. I mean, we won't be tracking on how much of our AUM would be where customers are coming and taking an additional loan because LTV is available to us.
If you look at our customer database, the number of loan accounts is around 91 lakhs, whereas number of active customers is around 59 lakhs. So which means that every customer has maybe more than one loan, which also explains the fact which I mentioned. Some people, when they have a requirement, they will come and take an additional loan. So we don't want to call that as a top up. It is a wrong terminology to use for that situations.
Sure, understood, sir. Thank you so much for answering my question. Thank you.
Thank you. The next question is from the line of Nischint from Kotak Institutional Equities. Please go ahead.
Am I audible?
Yes, sir, you're audible.
Thank you. I'm looking at slide 42. You give gold price per gram of 6,580 in June. What exactly price is this?
Which slide?
So 6,580. I mean, is it like a 23 carat, 22 carat price? What is it?
Which slide are you referring to?
That is 22 carats.
22 carats, sorry. 22. The ornament gold is all 22 carats.
Okay, and what would be the price today? I believe this is June end, so.
I think it had come down to around 6,200 or so. Then again, now it is 6,500.
6,700. Just 1 minute.
Today the price has again it has come back. So after the budget,
today price is 6,565. 6,565. 22 carats. Yeah.
And today's loan book in that sense would be greater than the loan book as on June end, or would it be more or less similar levels?
So 1.5 months have passed since June 30th. So the newer loans will be happening at the newer LTV. Probably the older loans would have got, which has happened at lower LTV, would have got closed. So I can't comment on the exact LTV at this point of time. So you visualize on that basis. As and when we progress, the newer loans will happen at newer LTV. Not necessarily that every customer is going to take at the maximum LTV.
No, but fair to say that your AUM is higher than the 81,000 crores that you reported in June. Don't ask me that question right now. We already discussed that. Disbursements have been good in the current quarter. So that's all we can explain. Okay, sir. And just LTV on NPAs, I think you mentioned this number, but I'm not sure if I picked it up.
It is 52%.
54%.
54%. And just one last one, and this is actually on the microfinance business, where we have seen fairly sharp rise on a sequential basis on stage 3 loans. So if you have any commentary on that, and how do we see the trajectory for that?
Yeah. The stage 3 is, yes, definitely, it is across the board, across the industry, the stage 3 has gone up, and we are actually much better off than majority of the similar companies.
Are you planning to invest any capital, further capital in the microfinance business?
I think they are looking for an IPO.
Okay, so nothing from our side.
As of now, nothing. Because I think they can manage it, and there is also an IPO which is planned. It all depends on the outcome of that.
Got it. Thank you very much, and all the best.
Yeah, thank you. The next question is from the line of Pranuj Shah from JP Morgan. Please go ahead.
Hello. Thank you for the opportunity. Sir, I think earlier in the call you had mentioned that competition in general is seeing some moderation. Now on the NBFC front, I can understand that one of the competitors isn't there, but you also mentioned that bank competition is coming off. So what is driving that?
It is not that bank competition. It is the focus of banks are not maybe not as aggressive as it was maybe 6 months, 8 months back.
Okay, I understand. But like in the case like earlier, banks are also giving other unsecured loans. So because of the RBI scrutiny increasing on that, I would assume that even the banks will focus more towards such secured gold loans and would focus towards these set of loans for smaller ticket sizes. So that is not the case?
I wouldn't want to comment on that because banks have always been doing gold loans and unsecured loans. Both are always there. I'm sure banks get a much higher yield on unsecured loans than the gold loans. It's some decisions they have to take, nothing on our side. What we have seen is that the competition, the aggressive competition from some banks have actually waned. That's it.
Understood. And sir, just one more thing. Sorry, coming back to your auction and your stage 2+3. Like if I look at a stage 2+3 book, that is higher even on a year-over-year basis by around 80 basis points. So generally, for how long would you wait before you start sending auction notices again to customers? Anything of that sort you can help us understand?
We will try to keep that NPA within some limits. Also, we wouldn't want it to go very high. But then we are actually taking some efforts to ask the customers to come and close the loan and probably take a new loan. That's what we are focusing now, so that we are able to save their gold. Our focus is mainly to save the gold of the customer. So probably we have been having last year this quarter our stage 3 was 4.2%. Last quarter it was 3.8. Now it is 3.98. So if you look at the quarter of similar quarters in last year, the stage 3 was 4.6. Today it is only 3.98.
Actually, I was looking at both stage 2 plus stage 3. But all right, I get the point. Thanks a lot, sir.
Thank you. The next question is from the line of Raghav Garg from Ambit Capital. Please go ahead.
Hi, thanks for the opportunity, sir. Just one question from my side, in terms of bank competition. So in the past, we've observed that there has been some misutilization of the interest subvention subsidies from banks, which is, one of the reasons why they were able to give lower rates on gold loans. Another thing is that also very recently, one of the largest PSU banks said that they were toning down on agri gold loans. So just connecting these two, three things, is that the reason why banks have toned out their gold loan efforts? I think in the past you have also commented at some point in time that banks were not really playing a fair game. Just some of your observations or commentary on that will be very useful.
No, we have been always earlier we were always putting up to the regulator that this is happening. Probably they themselves would have realized some of these things and changed. I wouldn't want to comment anything on that because we have been always saying that there was something unfair, etc. happening. Probably some of the banks would have given some instructions to do that. I'm not sure about that. But what I feel is that aggressiveness has toned down.
Understood. And sir, another question, when I look at the data, clearly you've gained quite a bit of market share in this quarter. Can you provide any insight in terms of what percentage of your customers which were acquired this quarter, they were earlier taking loans from, say, another gold loan lender? Is that, a data point that you would have handy?
Actually, customers don't come and tell us that I have taken the loan from X company and they're bringing it to you. They come with their gold. We don't ask them from whether it's at plastic anywhere else. We don't have any data on from where they have taken this loan, etc. Usually what happens is somebody takes a loan. When he gets the money, he repays that loan, keeps the gold with him. Next time he goes to X company. So usually what we see is most of our customers come back to us and new customers also come. So it is not that he is taking gold from X company and giving it to Muthoot. No, nobody does that. They take the gold, they keep it at home whenever they want, because when they get the money only they can repay the loan from the other company. X company, they will repay the loan when they get the money. They will keep the gold at home. Next time, after 1 month, 2 months, when they want the money, they come back. Instead of going to X company, they may come to us. That's all what can happen.
Understood. And sir, how much more can the cost of funds increase from here?
So, this quarter it is around 8.75. I think, probably another 25 bits.
Understood. That's
so we also taken the ECB borrowing where the average cost will be around 9.6 on a monthly basis. So that also will increase the overall funding cost.
Thanks.
Mr. Raghav, does that answer your question?
Yes.
Okay, thank you. The next question is from the line of Jignesh Shale from InCred Capital. Please go ahead.
Yeah, hi. Am I audible?
Yeah, yes.
Yeah, perfect. Thanks. So just a couple of questions. One, you have been saying that gold prices have been moving up and down. So how frequently do you revise your the pricing, or is it remaining fixed, or over a period of time you revise the gold pricing, or for 1 gram, or it is regularly being revised based on day-to-day price movement?
That was your question. Any more questions?
Yeah. Secondly, I also wanted to check your personal loan portfolio is right now around 34 billion, if I'm saying it correct. How much of it will be cross-sell to our existing customer, or will it be a completely fresh set of customers? That is second. Third, you have guided for 15% growth.
I didn't understand the question. What is it?
So your personal and portfolio, what kind of customer profile is it?
Okay. Yeah.
So is it a same like gold loan customers, additional loans, or your 15% you're giving a gold your loan guidance right now, but you're saying south and north would be equal, right? So can you guide us something on the branch expansion side? Are you planning any more branch expansion, and where exactly will it be happening? That is something I wanted to understand. And fourth, lastly, you had given that up to 1 lakh, 1 to 3 lakh, and 3 lakh and above percentages for the quarter. Can you give us the same number for last year? Is it possible? That's my 4 questions.
The LTV rate is fixed every day dynamically. So it depends on the daily price movement. So every day the LTV is fixed. Okay. Every day it is fixed based on the price movement. Actually, the price movement is taken last 30 days average, but then every day it is fixed. Every day it moves. It is 4,900 today. Tomorrow it may be 4,902 or 903. So that is the number one. Number 2 question is about our branch expansion. Yes, we have been. What's it? Yeah, we have been growing our branches. Yes. We have been growing branches wherever the regional office comes and says there is good potential in this place, we open the branch. So probably last quarter also we opened some branch. Going forward, this year we may open another 100-150 branches in this year. Another question you asked to us about
personal loan customer profile.
So ticket size you have asked for last year. So last year up to 1 lakh it was 35%, 1 to 3 lakhs it is 38%, and above 3 lakhs it is 27%.
All in the 30% range.
Yeah. So basically we are seeing that more than 3 lakh customer bases basically has increased YOY. Is it correct? Or it's almost similar?
So from 27% to 31%.
Yeah, people are getting more prosperous.
Understood. Okay. And just follow up on what you answered. So also I wanted to check your personal loan customer profile. If you can tell me that one, that will also be useful.
We wanted to do all this personal loan and all to actually give loans to our existing customers, because when we looked at the existing customer profile, we found that they were taking home loans, they were taking personal loans, they were taking vehicle loans from elsewhere. We thought we can do that. So of course, to start with, we couldn't do that alone. We went to the open market also. We have an open market. Probably today it will be about 50-50 or 50-60% should be open market and the others are cross-sell to our customers. So cross-sell is just a lead generation. A customer who we feel has taken a loan from X company, personal loan, we can always ask him, why don't you take the personal loan from us also? I think all the banks also do the same thing. When they give a vehicle loan, etc., all their gold loans and personal loans, etc., banks also try to do that.
Understood. So just to follow up quickly, since you're saying, branch expansion wherever it is possible, you'll be doing it up. But I think in North, you'll be less penetrated compared to South, or is my understanding incorrect? So the probability of branch expansion...
Whenever there is a requirement in North or South, we just open it, sir. That's all.
Oh, okay. Understood. Perfectly understood. And I guess that's it from my side. And just sorry, one last thing. When you are saying it is daily 30 days moving average, and and then based on LTVs, so if there is a steep correction in gold prices, then it might happen that LTVs might even inch up, right? That is possible. I mean, if in case of gold prices moving down suddenly.
Yeah. It will start moving because that is the RBI's instruction. It's not that we do it. It is the Reserve Bank of India's instruction that the Bombay bullion rate average of 30 days should be taken, and that should be the LTV fixed every day. It's a moving average of 30 days.
Perfect. Thanks a lot, sir. Perfect. That answers my question, sir. Thank you and all the best.
Thank you. The next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Thank you, sir. Thank you for giving me the opportunity and congrats on a good set of numbers. So on the slide 51, as we have seen the operational efficiency, in fact, this quarter was one of the best quarters in terms of sequential growth in the AUM, but still cost to assets, or you say operating expense to average loan assets, still inching up in Q1 itself. Is there any one-off in operating expenses, or how one should see this number going?
So, that reduction is primarily because of the 11% growth on a QOQ basis in AUM. So, otherwise operational expenses continue to increase, and absolute amount wise.
Rent goes up, salary goes up, everything goes up only.
No. I was saying that if you have given the operational efficiency number, which has inched up from 4.1% to 4.24%. So though there has been an increase in the AUM growth sequentially, but still operating expenses has increased. So any one-off or this number, how should see?
Yeah. So the operational numbers, pure operational expenses, it is 3.12%, and 1.12 is actually because of the impairment provision. So that increase is actually because of the impairment portion, which we explained it earlier. Because of the loan growth, there is around 100 crores of impact, and because of the increase in the NPA, there is another increase of around 100 crores. So that is the reason why the total percentage which we have put is slightly higher.
Okay. So secondly, in the RBI monetary policy, they have asked to be the monitoring of end use of funds to be done by the NBFCs or banks as such. Generally in gold loan, we generally don't focus on the end use where the customer is using. Do we have to now do that thing, or will it have some bit of impact? How one should see that?
I have not gone through that requirement. I have to look at that and then come back to you.
Okay. And lastly, on a Belstar Microfinance, we have already filed the DRHP. So, and this quarter, it has been slightly harsh for MFI portfolio. We have seen in our portfolio as well. How one should see this IPO timeline, or how it is going, please?
We don't have any definite timeline, etc. As and when the market is right, and when the approvals come, we will go for it. That's all. We don't have any hard and fast rule that it should be done in next month or this month or next quarter, etc. Whenever things are, the approval comes and the market is right, we should go for the IPO.
So lastly, on the MFI, this Belstar Microfinance, how the industry, this quarter I know it has been hard. How you are seeing this industry part, any improvement in asset quality or growth, how one should see?
I think overall the industry is growing reasonably okay. They also have sometimes ups and downs. Elections come, some impact will be there for elections. So those are all geographical factors which affect this. Otherwise, the microfinance industry is an industry in itself. Is a business in itself. They have their own challenges. They have their own advantages, etc. I think there is nothing much we can also do in that. We are also one among the industry, not the biggest player also, a reasonable player also.
Okay. Thank you very much, sir. Best of luck.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to the management for closing comments.
Okay. Thank you. It has always been a pleasure interacting with our investors and our well-wishers. I'm sure Muthoot has been, we on our part assure you that we will do our best to do the best in all fields of the business, whether it is quality of business, whether it is governance, and all sides. We will put in our best. We are thankful to your support for all these quarters, all these years, and we would request your support in the coming days also. From our part, we will do our best to keep all our stakeholders happy. Thank you and good day. Happy Independence Day to everybody.
On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.